Alright guys, welcome to a second video on job order costing, where I'm going to jump into a very extensive question and show you what kind of things you should be expecting on your midterm or on your final. So this question is really going to prepare you for all of that. Alright, so this paragraph is really about calculating your predetermined overhead rate. Remember guys, that the first thing that you want to do for job order costing is to calculate your predetermined overhead rate. That's like step one. So from this paragraph, I'm going to take the expected MOH and the expected base activity, in this case being the direct labor hours, which are, so the figures are 150,000 and 16,000. So over here, I've calculated it out for you guys. So it's 9.375 per direct labor hour. What that means is that for every direct labor hour that your employees are going to work, you're going to apply $9.375 of MOH to your product. Okay, so let's get started with the journal entries now. So purchased 250,000 of direct materials on account. That's easy. Debit your raw material inventory and credit your accounts payable. Next, purchased 10,000 of cleaning supplies on account. So again, you debit supplies and then you credit accounts payable. Easy still. Third entry is a bit tough. Requisitioned 240,000 of direct materials and 9,500 of supplies for use in production. Now, in this entry, there's like a little some stuff going on that may be new to you. So let me explain. Direct material is directly related to the product. It can be traced back to each product. So for example, if in this case, John is making burgers, right? So he can see how much meat he puts into each burger. He can see how many buns go into each burger, right? So that aspect of the product goes directly into your work in process account. Now, work in process account is something that helps you keep track of your resources and really helps you see what happens in the manufacturing process. Since it is directly traceable, it goes directly into your work in process account. However, your supplies are not directly related. You can't directly relate your, trace your supplies in your products. So supplies can include like cleaning supplies. You want to clean, John may want to clean his grills, right? So you can't really say, I put 2 drops of cleaning material for that one burger. That's not a really accurate way of estimating your supply costs, right? So in that sense, like supplies is directly related to the product, but it can't be traced. That is the main difference when it comes to supplies, right? So in that case, supplies is a product cost, but it is untraceable. So in that case, what you do is you put it into your MOH account, your manufacturing overhead account. And at the end, you apply a rate using this rate. You apply it based on the number of direct labor hours. I'm not going to get into that in much detail, because when the entry shows up, I'm going to explain what it means. So, and then you credit your raw material inventory, because that's what is left, and it's gone into the manufacturing process, and it's the same thing for supplies as well. Part D is incurred employee costs, direct labor, indirect labor, admin salaries, and sales wages. Again, this is a bit tricky because you have to analyze the information. So direct labor, it can be directly traced back to the product, right? Because you can tell how many hours your employee put into making one burger. That is traceable, right? Indirect labor is not exactly traceable. Indirect labor can be like supervisor, like a supervisor over the person that makes your burgers. So you can't really say, oh, this guy like spent 1 hour supervising, but during that hour, how will you know how many burgers like he supervised? That's not possible, right? That is not a very effective measure of like that's not very effective, and you can't really put it directly into your work in process account. Therefore, you put it into your MOH account, same as we did over here, and you add up all your MOH to find out what it comes out to at the end of the year. Admin and sales wages are office related. They're not really directly related to the product, and they're called period costs. So they are treated as a separate category. So this is how your entry is. Debit your work in process for the direct labor. debit your MOH for the indirect labor because it is still a product costs, and then debit your sales and admin in a separate category because that is a period cost and is not directly related to the product. And then for all of these, you credit wages payable because it's a liability. Okay, moving on. Part number E. Advertising is 3,000, right? So debit your advertising expense of 3,000, that is a period cost, and credit your accounts payable. Part F is property taxes, 8,000. 10% of this page relates to sales offices and 90% was the kitchen. There you go. So now the question is telling you the taxes are 90% like related to the kitchen. So that means is that what that means is that 90% of 8,000 is like related to the product, so that makes it a product cost, right? So you can't really treat product costs as a normal expense. It has to go into MOH. So you want to find the percentage of like 8,000 it goes into sales offices and then 90% it goes into the kitchen, and you want to treat them separately. So in part F over here you see debit MOH of 7,200 and then taxes is a separate expense of 800 and then you credit taxes payable. Okay, so moving on to part G, the same procedure. Depreciation 55,000. You weigh each of these for according to what they are. So 80% relates to kitchen equipment and 20% relates to office equipment. So again, you take those percentages, multiply them, and then debit MOH for the percentage that is related to directly to the kitchen, to the product, and then debit depreciation, which is not directly related to the product. And then you credit accumulated depreciation. And then part H is insurance expired 15,000, same procedure. All right. Part I is manufacturing overhead costs were applied to production. Now, that is where this comes in, what you calculated at the start of the question. Why do you apply MOH? Like, it's the middle of the year, right? Look over here. You'll notice that you have more entries after that one. That means that the year hasn't ended. But why are you doing this right now? Well, you're doing this right now because your products have been completed and your customers have now come in to buy those products. You can't tell them, well, I can't sell you this product because I don't have the cost information, like the complete cost information. That's not how business works, right? So you want to sell that product off and you want to make an estimate of how much MOH went into that product. So this rate is really an estimate of how much MOH you want to put into each product. So when I'm applying that rate to my products, this is the entry that goes into it. So I debit my work in process, and then I credit my manufacturing overhead, because now finally I have a final figure that I can apply to my work in process and really finalize how much costs I have for my products. So I debit WIP and I credit MOH. But how did I get this 18,000? Where did I get this from? Well, I took my direct labor, sorry, that shouldn't be hours, that is in dollars. I took my direct labor cost of 450,000 right over here, and then I divided it by the wage rate, which is 25 right over here. That gave me 18,000, and then I multiplied to find my figure. Okay, part J is orders costing 79,000 were completed. Now, completed means that your manufacturing process has been completed and your products have now moved into finished goods. So you debit your finished goods and you credit your work in process by the same amount, 790,000. Part K is the company has sales on account of 1,800,000 and the jobs cost 720,000. Now in this case, there are really essentially two entries that go into this. So now you have sold your products. So they have gone out of your finished goods inventory and they have been debited into your cost of goods sold. That is a separate account that you study in financial accounting, and this concept has come up again. And to record the sale, you credit sales and you debit your accounts receivable. All right, guys, so that is it for the entries. We are still left with part B and C, which I am going to cover in the next video. Stay tuned, guys.